Right now they own about 3.1 million LEO. Let's say LEO goes to $1 in the near future. That would make their balance sheet $3.1 million. I did the math on this, and to reach 10 million LEO by the end of the year, they need to start buying over 69,000 LEO per day minimum. That's what they need to average if they want to hit 10 million by the end of the year. LEO is very cheap right now. It's what is it, 14 cents? At the end of the day, there's 29.5 million LEO. There will never be more. There will only ever be less, because as people bridge, it burns the supply and creates deflation. DeFi, giving everyday investors access to opportunities once reserved for the 1%. Everything about that just gets me very excited. LeoStrategy is taking the bet that LEO is pristine capital and it will outperform everything in the future. Hey, what's up, everybody? Just wanted to do a quick video and talk about this 10 million plan. So I just saw this post from LeoStrategy a few hours ago. It took a little bit of time to digest everything that they shared here, because there's a lot of information in this post. They obviously were kind of teasing that kind of macro plan was on the way, and I was looking forward to seeing something which I kind of anticipated looking similar to documents from MicroStrategy and MetaPlanet and other strategy companies that are obviously doing a very similar, treasury company approach, but doing it to Bitcoin. So I was kind of expecting something along those lines, but for LeoStrategy, especially with Surge kind of getting close to being sold out. I think it's like 90% sold out now. So that's pretty awesome to see. But there's a lot more on the horizon for LeoStrategy, and the more that they share, the more kind of onions. I mixed up the analogy. The more that they share, the more layers of the onion that we get to peel back, not more onions. It is fun to see all this content come out of LeoStrategy and see where the vision is in terms of the long term of the fund. Obviously, they're kind of tapping on people like me and others in the community, not just through threads and through posts, but in many ways, tapping on us and saying, hey, where is demand? Where can we add value to the LEO economy? And they're doing, in my opinion, everything right. So right now they're in really the strategic scaling phase, and they talk about it in this post. This is a critical part of LeoStrategy, which is they need to acquire as much LEO as possible. And as LEO rises in price, obviously the balance sheet starts to expand exponentially. So, right now they own about 3.1 million LEO. And, for example, let's say LEO goes to $1 in the near future. That would make their balance sheet $3.1 million, which obviously would then lead into their ability to expand their offerings, build out more products, build out more arbitrage revenue. And they talked about the arbitrage revenue in this post as well. They also shared something on Threads earlier, which I don't think was mentioned in this post, about how the arbitrage bot revenue continues to increase. So they had a record day of like $140 or something along those lines in terms of cross-chain arb profits. And that's only on LEO. So LSTR and Surge aren't on. I'm not sure when they plan to put them on base, but when they do eventually make it to base, that's going to open up, what did they say, 8 new routes for LSTR and Surge. So they said there's 12 routes right now for LEO, which is accurate. There's 12 different cross-chain routes for LEO, and they're currently, actively trading all 12 of those. And then when LSTR and Surge launch on base, it'll open up the cross-chain bridging for LSTR and Surge between Hive Engine and base. And that cross-chain, connection, those routes can then be market made and turn into profits for the fund. So really the key here, and they talk about it, is, building a profitable stack while providing value and desirable products, services, and to the LEO economy and the LEO ecosystem and community. Let's dive into this. I'm not going to talk too much about like the actual body of this post. You're welcome to go, and I'll link it in the description. Please go read the post and kind of digest it on your own. It's pretty lengthy, and it's a fascinating read in my opinion. But I did see, there's some nice slides here that I can just pull up and, give my opinion on. So let's just kind of treat this almost like a slide deck. I think that's kind of the intention of the post, is to be like a slide deck with text in between. So I'll treat it that way and just give my opinion and thoughts. So first of all, you've got the featured image, which says this is the 10M plan, which obviously stands for million. So 10 million plan. And it's to accretively acquire 10 million LEO in 2025 and 10 million USD in 2026. So the first part of that is no news to anyone on LEO. So we all know that LeoStrategy continues to say that their goal is to acquire 10 million LEO before the end of 2025. So as LEO has risen in price, obviously it's gotten a lot harder for them to buy LEO. But they are still buying, I think they mentioned at a rate of like 30,000 Leo a day. I did the math on this, and to reach 10 million Leo by the end of the year, they need to start buying over, I think, 69,000 Leo per day minimum. That's what they need to average if they want to hit 10 million by the end of the year. So they basically need to 2x the pace at which that they're buying Leo. So I don't know how they plan to do that. This plan obviously talks a little bit about how they're planning to do it, but I think there's still a lot kind of unsaid from this post. But this post gives us kind of the macro view, which I think is the goal here. It's not to open the whole playbook. It's to at least tell us where we're headed, and then we can kind of extrapolate in real time as new products, services, and derivatives come to market. How they plan to turn the flywheel and get to 10 million Leo by the end of the year. So speaking of flywheels, the next slide is the LeoStrategy flywheel. LeoStrategy releases products, services, and derivatives that are collateralized by our Leo holdings. These instruments fulfill a critical part of our Leo mission to democratize financial knowledge and access. That actually says the Leo mission, which is obviously all of our mission, which is, if you go back 6 years ago, literally when Leo was created, the entire mission the whole time has been democratize financial knowledge and access. That's obviously something I'm passionate about. And I think LeoStrategy has done a really good job of not only playing on that narrative, but actually embodying it. Obviously this is all leading into the financial, actually knowledge and access. I mean, in their posts, they said that they're focused on the access part, but if you think about it, by building products like Surge, they've educated all of us about finance in many new ways. I think a lot of people didn't know much about how fixed income instruments worked. And now that there's Surge, I mean, it's really teaching you about how this stuff works. So, to the average person, they would have no idea how any of this stuff works. But if you've touched Surge, you kind of understand more about fixed income instruments than I'd say 99% of the public. So they are actually achieving the knowledge part of the mission as well. So I think they should give themselves a little bit of credit for not only giving more access, but actually knowledge as well. So the 3 bullets here are the flywheel is to buy Leo and then launch accretive products and generate revenue. So I think the key word to note in this is that they're collateralizing their Leo holdings in order to launch more products, generate revenue, and buy more Leo. So this is really the key of the flywheel is that they buy Leo, they build a big balance sheet of Leo, then they launch accretive products, and really accretive is a fancy term of just saying they launch products that have a net inflow to the fund. So when they launch a product, it should be accretive to LSTR holders is really what this word broken down means. And what that means when a new product comes like Surge, the net benefit is that more Leo per share is added for all LSTR holders. And by doing that, they increase the value of LSTR, which is obviously part of the equity backing of everything they build. And then on top of that, they're also adding more Leo to their balance sheet, which then is used to kind of collateralize all the different products. So when they launch something like Surge, people ask, well, how do you get the $1 floor value? It's because of the Leo being collateral for that $1 floor value. For example, in the nuclear event of like the fund dissolving, for example, Surge holders would get paid back first at a $1 per Surge preference. So basically, if there's 500,000 Surge out there in the market, then all Surge holders would get paid $1 per Surge that they hold. And that's how you get that floor price. It basically is a confidence game, right? Like as long as LeoStrategy is holding enough Leo on the balance sheet to collateralize all the Surge, then that floor price will always exist. As new products come out, and they'll talk about some of the big categories they aim to build out in, those products are going to be collateralized by more and more Leo on the balance sheet. So I think this is where things get kind of interesting in terms of how does LeoStrategy scale? How does LeoStrategy utilize their Leo to actually generate more revenue that can then go capture more Leo? Where things get interesting is the USD value of the Leo on their balance sheet becomes extremely important to scaling. So we'll kind of get into that after this. But I think understanding this 3-part flywheel is really important. So right now they're in this heavy accumulation phase, which is to buy as much Leo as possible, perma-stake it as sLEO on their balance sheet, and then they launch accretive products that are backed by the Leo held by the fund, and then they generate revenue off of those products, either directly or indirectly through the market makers, and then they utilize that revenue to then go back to the flywheel and basically reset and buy more Leo, launch more accretive products, and generate ever more revenue, which then again feeds right back in. This strategy requires scale, and we'll kind of get into that as well. So The 10M plan, or 10 million plan. Phase 1 is to reach 10 million LEO on the balance sheet by the end of 2025. Phase 2 is to raise $10 million in new capital throughout 2026 to acquire even more LEO and amplify our treasury revenue. So the 10 million plan, I think, is pretty geniusly designed. And I know that this pulls a lot of inspiration from things like Metaplanet's 555 plan, or strategies. I think they call it the 2121 plan or something like that. So obviously they're kind of playing on this, some form of alliteration that these other strategy funds are using. But they're kind of playing on the similar model. And what they've adapted it to, which I think is genius, is that obviously accumulating the first 10 million LEO is going to be a lot easier than accumulating the next 10 million LEO. And that is if it is even possible for them to accumulate another 10 million LEO tokens. So what I think is genius about the way this is designed is they're basically saying, hey, LEO is very cheap right now. It's what is it, 14 cents? They're saying LEO's super cheap. So obviously, we're building the fund in a way where we can acquire 10 million LEO off the market, which, would cost about $1.4 million. So basically they're saying we're going to find a way to get $1.4 million worth of value and then buy LEO with it. So that's 10 million LEO. Then they're saying after achieving that 10 million LEO goal, we expect LEO will be a lot more expensive. Obviously, there's only 30 million LEO with the bridge burns, and the bridges are burning a lot of LEO right now. There's only like 29.5 million LEO in circulation. At the end of the day, there's 29.5 million LEO. There will never be more. There will only ever be less, because as people bridge, it burns the supply and creates deflation. So for them to get to 20 million LEO, I think will be near impossible, because what you would assume would happen is, there's plenty of us who are unwilling to sell our LEO, for anything under $1, $10, $100, pick your price. So as the LEO price starts to go up, there's going to be less and less sellers that they can find, but they have to keep, essentially the LEO price has to keep going up until LeoStrategy can find sellers so that they can buy their LEO. So obviously as LEO, for example, as LEO goes from 14 cents today to $1 tomorrow, buying 10 million LEO is, nearly 10x as hard. It requires 10x more USD capital in order to buy it. Obviously, that's just basic economics. I'm telling you something you already know. But I think what's interesting about the way they've outlined this plan is it's saying, hey, we're going to raise enough capital to buy 10 million LEO this year, and then we're going to leverage that 10 million LEO on our balance sheet to then raise another $10 million next year. And that $10 million will buy, some amount of LEO. It's really unclear. If they buy LEO throughout 2026 and LEO's trading for over $1, or let's just say LEO's trading at $1, well, then they're going to buy another 10 million LEO if they can buy 10 million LEO at $1. Or they raise $10 million throughout the course of the year. They're continually dollar cost averaging into more LEO, and the LEO price continues to go up because they can't find sellers, and LEO goes from $1, $2, $5, $10. And obviously then they don't buy 10 million LEO. They buy some amount less than that, but they still spend $10 million to get whatever LEO they get at the end of the day. So I know that gets into the weeds of the math a little bit, but I do find it very interesting. And I think that the framing around going for, 10 million LEO first and then going for $10 million later is really important. So I wanted to spend a little bit of time on that. And I know that they talk about it here, how LEO is a hyper scarce asset. So again, I'm linking this post below. Please go read it and kind of dive into the details yourself. I'm just kind of giving my opinion, and my perspective on things. Obviously, they go into a lot more detail from their perspective on all of this stuff, which is going to be a lot different than mine. They expect LEO to be trading well north of $1 to $3. So I kind of talked about that a little bit, but I do find that to be interesting. I know that they mentioned something here that I wanted to talk about. Here we go. This is the line I was looking for. So this 10 million LEO builds our permanence of capital, while the next 10 million USD to buy, sorry, I read that kind of odd. This 10 million LEO builds our permanence of capital, while the next 10 million US dollars buys LEO to unleash scale. Maybe I'm not, does that make sense? This 10 million LEO, while the next 10 million USD buys LEO to unleash scale. I guess it depends on how you want to read that. Maybe that's worded a little strangely, but I think the two key words are actually bolded here by them, which is that the first phase of the 10 million plan is to build permanence of capital. And the second phase of the 10 million plan is to unleash the scale of that capital, leveraging the first 10 million LEO to create $10 million worth of capital accretion, essentially, into the fund. So that's really important, and it'll kind of set us up for the next slides. Next is, and I'm going to be super long-winded. I'm already at 15 minutes. Bear with me. I will try to speed it up. So there are 4 pillars that build the Leo financial network, aka LeoStrategy. These layers form a decentralized, over-collateralized, yield-driven economy that rivals traditional finance in permanence, transparency, and accessibility. The four pillars are fixed income assets, so fully on-chain yield instruments offering predictable income, over-collateralized by Leo, held in our on-chain vaults. Surge is the first fixed income asset released by LeoStrategy. Real-world assets, this is where I thought things got kind of interesting. I know that they've been kind of teasing some things about RWAs, and I teased something on Threads too because I kind of picked up on that and decided to post it out so I can be first. Tokenized equity derivatives of productive real-world assets backed by Leo on our balance sheet. These bridge and DeFi, giving everyday investors access to opportunities once reserved for the 1%. Everything about that just gets me very excited. I think RWAs, I mean, if you go back to my videos over the last, I don't know, 5, 6, 7, 8 years, I've talked about the tokenization of everything. I'm a huge believer in it, and I have been, really for the last almost decade since I got into crypto. So I've always believed in the tokenization of everything. Actually, I was really early into Ethereum. I remember when Ethereum launched on Coinbase, and I started buying it hand over foot because the tokenization aspect was what was the breakthrough for me. It was, hey, anybody can launch a token here, and you can build out contracts, and one day everything will be tokenized, whether it's a piece of real estate, or a stock, or really anything else. Everything will eventually make it to the blockchain, and there's going to be many, many platforms that need to bridge that gap. So I absolutely love seeing this as a core pillar of what LeoStrategy intends to build. You could imagine, and I kind of wanted to break this down because imagine that you've got all these tokenized equity derivatives, and this is how they word it. They're all backed by Leo on their balance sheet. So essentially, what does it require to release a tokenized derivative? It requires that you have some sort of backing for that derivative, right? And then from there, you have some sort of, I don't know, and I obviously don't know how this is going to work exactly, but you have some sort of mechanics in order to maintain the one-to-one pricing. So you can imagine, for example, you have a tokenized stock of like Apple, for example. So how do you tokenize an Apple stock? Well, you need whatever you're tokenizing, the token that you create, you need it to track the price of Apple in some way, shape, or form. And while you do that, you need to have some kind of backing so that people trust that if they buy one share of Apple, or call it T Apple because it's tokenized Apple, how do you encourage people so that if they buy one tokenized share of Apple, that in the future when they want to cash out, whether it's through the open market or some kind of conversion feature, how do you convince them that they are able to cash out, and how do they have confidence that they can trust the backing of the asset so that they can cash out at whatever the future price is. Say that a tokenized share of Apple is 150 today, and tomorrow or just say like 2 years from now it's 250. How does the person buying it at 150 today feel confident that at 250 in the next couple of years they'll be able to sell that T Apple share back and get the 250? And then what kind of mechanics are driving the one-to-one pricing of the one Apple to one T Apple shares? So that's where RWAs get really interesting and a little bit complex because you need a few different things to happen. You need some sort of mechanics to drive the synthetic, one-to-one peg. Then you also need mechanics in terms of collateralizing the T Apple shares, for example, so that people know that at the end of the day, their one T Apple is worth one Apple. So that's where things get very complex. And unless you're holding an actual like one Apple share and then you tokenize it and sell that value back as a tokenized Apple share, that's where things get very complex. So I think what's interesting about the approach that they're talking about here is that they're tokenizing derivatives, for example, like T Apple, and they obviously don't mention T Apple, I'm just making that up, but they're tokenizing some kind of derivative, and that might be something like a T Apple, and they're backing it by Leo. So the Leo on their balance sheet then becomes the backing or the confidence behind the T Apple share. So basically what I could envision happening is, for example, they might release one T Apple share for $150 if that's the price of Apple at the time. And that would be collateralized by $150 or more worth of Leo on their balance sheet, because they did mention that it's going to be over collateralized, right? So you know that it's going to be backed by at least $150 worth of Leo. The question is, how is LeoStrategy economically going to be able to take that trade? How do they offer you one T Apple share in exchange for $150? Well, the trade that they're actually taking is they believe that Leo will outperform Apple in the long run. So by issuing the one T Apple share and then using the capital you spend to buy the T Apple, to buy Leo and put it on their balance sheet and collateralize that T Apple, they're actually making the bet that Leo is going to outperform T Apple. You're going to have T Apple. And if Apple goes up, let's say Apple goes up, 100% in the next 2 years, it doubles, right? Well, they're making the bet that Leo is going to go up more than 100% in the next 2 years. This is the very same mechanic that's applying to Surge. LeoStrategy is actually making the bet that Leo is going to outperform Surge, right? Because if you think about it, Surge is a $1 peg, soft peg in terms of the floor price versus, so it's basically priced in dollars, right? So basically LeoStrategy is making the bet, hey, Leo is going to outperform the dollar. And as we build the LeoStrategy fund, LSTR is going to outperform everything, and LSTR will go beyond $50. So they're making the bet that if you buy one Surge, we're going to outperform the dollar, and therefore, as a fixed income product, we will come out ahead, but you will also get what you want because you want safety and you want income. And that is what Surge is offering. So apply that same logic to a real world asset like Apple. You are buying one share of Apple because you want exposure to Apple, right? Like you want the up and down side that comes with holding Apple stock, not a real Apple. And LeoStrategy is making the bet that, hey, we'll give you that exposure that you want, that synthetic exposure. In exchange, we're going to take your capital and we're going to buy Leo. And we're making the bet that Leo will be worth more money in the future. And it will be outperforming Apple. I think that's kind of the critical piece, right? Is that LeoStrategy is taking the bet that Leo is pristine capital and it will outperform everything in the future. And as long as, obviously the Leo mechanics are that the supply is fixed, Leo Dex is growing, everything's growing, the whole ecosystem is going to expand in terms of market cap, and that will lead to the LeoStrategy balance sheet becoming more and more over collateralized. So I feel like I could talk about this for hours, but the really fascinating thing is as more products are released, like Surge or like real world assets or whatever they come up with now, each new product actually enhances the security in terms of over collateralization of the previous products. So think about it this way. If, for example, 10 years from, like over the next 10 years, if they create 100 real world assets, every time they create one, they're adding more Leo to their balance sheet from raised capital, which then increases the collateralization ratio of all the other products that are out there in terms of LeoStrategy's product suite, which, by the way, as they continue to generate more capital, the Leo price is going to increase because of the demand and the supply. The supply is fixed of Leo, and obviously as LeoStrategy, the POL, and just user demand in general increases for Leo, that makes the whole balance sheet go up in terms of USD value, and now everything becomes ever more over collateralized. That is a really critical piece, and it is, honestly, I spent a lot of time talking about it, but I think it's worthwhile because I think that's the number one counter argument to LeoStrategy is like, well, how is any of this economically possible? And it's all economically possible because LeoStrategy is taking the other side of the trade, right? They're saying that Leo's going to outperform everything. So we will take the bet that Leo's going to outperform everything, and you can have whatever exposure you want, and that exposure is dictated, by whatever product, the mechanics of the product, whether that's Surge, offering fixed income and no downside, or a tokenized real world asset like T Apple that's offering, exposure to Apple. They're basically saying, we'll give you that exposure. In exchange, we're going to take the exposure of Leo. And over long time frames, Leo will outperform everything else. That will lead to more and more over collateralization, which will lead to more products. And then, by the way, we have a profit-driven vertical stack, which I will now try to slyly, be slick and drive that point in. So you build all these products and they become economically feasible while Leo outperforms every other asset. And you build a profit-driven vertical stack around that stuff. You take things like Surge, like LSTR, like Leo, if there's, T Apple or whatever they decide to come up with in terms of real world assets, say that 100 times fast. You build all those things, and then you create market makers that then make those markets and generate profits. Then you feed that back into more Leo accumulation, which then more over collateralizes the balance sheet even more because now there's more Leo inside the balance sheet. And as the USD value goes up and as the LEO amount goes up, it has like an exponential effect on the increasing total USD value of the balance sheet. So really fascinating to imagine. And I'm just very curious to see how this all goes. Obviously, like I said, their market makers came out and, have driven, $140 in profit already, in the last like 24 hours, I think they said, from the LEO markets. So that's awesome to see. And I think it'll just keep going from there, especially because it's only LEO. So now imagine LSTR surge and then any future products get added to that. Collateralized lending, obviously, I'm very keen to see this go live because I would love to see collateralized lending on LEO. It's something I've wanted for years, and LeoStrategy is now going to build it. And they've already shared like screenshots and teasers from the UI that they're building for it. So they said users will soon be able to take stablecoin loans against their LEO collateral. LEO as a deflationary yield asset becomes pristine collateral, and LeoStrategy earns interest and the sLEO yield as profit. So not only are they charging a small interest rate if you take a loan on your sLEO, they're also earning the yield from your sLEO. So, if you're watching this, you probably already know, but if you stake LEO on LeoDex, you earn USDC. So if you put your sLEO into a collateralized lending contract with LeoStrategy, they're going to charge you a small interest rate and they're going to earn the yield that your sLEO is earning while it's sitting in the collateralized lending contract. I think this is genius because if you imagine, for example, long term, that the staking yield for LEO on LeoDex is 10% and LeoStrategy is charging, let's say, 5% APR on loans, well, now they're earning 10% on the value of your sLEO and they're earning 5% on the value of your loan every year. So you can open a collateralized loan and LeoStrategy is going to just basically going to be printing profits and then using those profits to then go buy more LEO, which actually will drive up the value of your LEO that's sitting in the sLEO contract. So it's kind of a win-win. Like you put LEO to work so that you can take a loan against it, and then LeoStrategy is generating revenue from that LEO that you put to work, and then they're using that revenue to then increase the value of the LEO that's sitting on everyone's balance sheet, really. And then your loan, basically they outweigh the value of the USD loan that you've taken. So then it actually becomes a trade of a retail investor who's saying, hey, LEO's going to outperform the dollar. I'm going to put my LEO in this contract, take some dollars out in the form of stable coins. And then one day in the future, I just pay back the stable coins. As long as LEO outperforms the US dollar, in terms of stable coins, then I win, right? Again, super interesting economics when you start to really dive into it. Every time I feel like I've spent enough time researching this stuff, I find like 10 new layers. Like I was saying at the beginning of this video, not more onions, but more layers to those onions. Yeah, here's the teaser screenshot. They've shared this a few times, so nothing new here. I don't know if you've seen it, but they basically have shown, you got sLEO collateral, you got the loans outstanding, you got the interest rate, which is 5%, origination fee of 1% when you open the loan, total interest earned, available to borrow, utilization rate, LEO acquired from the profits of the loans. So obviously all of this is placeholder data because the loans are not something that they've released yet. But I can envision, I think they're trying to share their vision here, and I can kind of see where this is going. I can envision a day where, there's a LeoStrategy app, there's a lending part of that app, and that's what they're showing here. And you can go to that lending section, take out a loan against your LEO, and then the fund earns revenue and uses the revenue to buy more LEO, which then makes not only your LEO more valuable, but everybody's LEO more valuable. And the LeoStrategy fund can just continue to essentially churn profits into more LEO, continually expanding the balance sheet. I loved this slide, by the way. Capital engine converts inflows into LeoStrategy is a capital engine that converts inflows into exponential value accretion, compounding yield, reducing float, and strengthening the LEO economy. So the first thing here is protocol income, permanent capital raises, yield auto compounding, and float reduction. So the protocol income part is LeoStrategy's generating income from all the different products, services, and derivatives they release. And then the second part is that they're doing permanent capital raise, things like the surge presale, for example, or if they end up doing, something like a tokenized RWA, that would be another permanent capital raise, etc. Then they're taking all the LEO that they buy from those first two things, and they're putting it into sLEO, and they're earning yield, which then they auto compound into more LEO. And then number 4 is float reduction. So obviously all the LEO from LeoStrategy is staked as sLEO and can never be unstaked and sold. So it'll never make it back to the market. So effectively, they're not burning Leo, but they're reducing the float because their Leo is taken off the market and will never return to the market. So that's a really important piece of things, is that as LeoStrategy grows, they're actually reducing the float, which makes Leo more scarce. And then if they're able to generate more demand, then it has an even more impactful relationship to the Leo price. So I love that slide. Very interesting. Again, go check it out for yourself. So the KPI slide here, how do you track the success of LeoStrategy? They have 3 metrics: Leo per share, Leo yield, and MNAV. So LPS, and they kind of break it down here. LPS is Leo per share, measured by outstanding LSTR shares and the total Leo on the fund's balance sheet. For example, if you have 3.1 million Leo today and there's 100,000 LSTR shares outstanding, the LPS is 31. So tracking that is obviously the thing that I've tracked the most. Leo yield, or the velocity of the growth of LPS. So basically you take the LPS last week, compare it to the LPS this week, and that's the Leo yield for the whole fund. So that's something I've been tracking as well in my videos, every Monday or so, whenever I get the chance to make them. Let's see, what else do we have here? Leo gain, the USD value gain of Leo holdings week over week, that can be projected yearly. So obviously that's really important because, like I said, the Leo that they acquire onto their balance sheet is then used to collateralize new products and services and derivatives. So, any Leo that they add to their balance sheet, they're then using to over collateralize these different products. So the USD value growth of the balance sheet is very important. It's just as important as everything else, right? So you want to see you not only want to see more Leo added to the balance sheet of LeoStrategy, you want to see the value of that Leo actually increasing in USD terms, because then it leads to scale, right? And that's where the 10 million plan really takes off. Get the first 10 million Leo, watch the Leo USD price rise. As that price rises, you're then able to launch a lot more products, services, and derivatives, and then you generate more revenue, and then you fuel the flywheel and get more Leo. MNAV is a fun concept that we've put a lot of time into, educating everybody on. And by we, I mean myself and like 10 other lions who love and understand all this financial jargon. The simplest way to understand it is that it's market cap to net asset value. So basically you take the market cap of LeoStrategy's LSTR token, which is $550,000 today, and then you compare it to the net asset value, or the total balance sheet holdings of Leo in USD terms. So at 3.1 million Leo with, a 13 or 14 cent Leo price, you get 465,000 USD. So you basically have $465,000 in net asset value to 550,000 in market cap for LSTR, and that's the combined MNAV. So if the LSTR market cap is higher than the value of the Leo on the balance sheet, then you have an MNAV premium, which basically means if you buy one LSTR token, it's trading at a premium relative to the holdings of Leo backing that LSTR. So kind of interesting math there. And we've talked about how you need to not only value LSTR at the current Leo holdings today, but also the velocity of additional Leo holdings in the future. So that's why companies like MicroStrategy trade at an MNAV premium, or MetaPlanet, for example, trading at like a 10 MNAV premium. The reason why they can trade at such crazy premiums is because the market expects that they're going to, not only have the current Bitcoin on their balance sheet, but have a lot more in the future. And that's essentially the same type of lens you can look at LeoStrategy with. We're getting to the end here. The 10-10 plan is how we anchor the Leo economy to permanent productive capital. Permanence creates stability, scale creates opportunity. Together they form the foundation of a financial network powered by Leo. So I wanted to read that because I just think it's, understanding that is really understanding the fundamental goal of LeoStrategy, which is, I think a lot of people at first were like, what is this? Why do we need another token? What is LSTR? Why does it exist? I'm not going to lie. Even I thought that initially, and LeoStrategy's actually been around a lot longer than just the last like 2 or 3 months. It's been around for many months before that. And I obviously bought some LSTR, and I liked the concept, but I think the execution needed a lot of work. It needed a lot of rewiring. In the last couple months, we've seen them really rewire things and really focus on that long-term, like 10-year vision, which I think is really important because people don't want something that's just a fad that's here today, gone tomorrow. LeoStrategy is not that, and they're kind of proving that one step at a time. And it will take time for that trust to get built. But LeoStrategy, one notch, one product at a time, is showing the market that it's not just, hey, we're not just creating a token. We're creating products, services, and derivatives that generate real economic value, and create a profitable fund, and then use that real, economic inflow in order to buy more LEO, scale the balance sheet, and that scaled balance sheet is then leveraged to continue to scale and expand. So that is, all of these concepts are very important to understand. And I think LeoStrategy is doing a much better job now than they were before in terms of communicating this. As each new product, service, and derivative comes out, I think with each new one comes more and more confidence in the entire, LeoStrategy ecosystem that's really being built. So I think they've kind of laid out this 10-year, roadmap. And obviously this initial roadmap is the 10 million LEO and then the $10 million next year. But they did say, it's a roadmap out to 2035 from a conceptual standpoint, which is you're going to get sLEO lending, you're going to get tokenized real world assets, you're going to get all these different products, services, and derivatives. And they're all going to be built with this very strategic mindset. How do we build things that are sustainable and generate revenue, and then use that revenue to then scale the balance sheet and lead to more over collateralization of all the products, which leads to more safety and more confidence around them. And having more confidence around them actually then leads to more scale. So very fascinating concepts. I love everything I'm seeing here. And like I said, I'm just fascinated every time, a blog post comes out, a new slide deck gets released. I think we're introduced to a lot of deeper concepts that come into the financial engineering of something like LeoStrategy. And I think this happened with MicroStrategy and MetaPlanet. And if you go study what's the general market perception of these things, people kind of went from this like skeptical nature, like, oh, why are you buying all this Bitcoin, to this, oh, well, maybe you're good because you're buying a lot of Bitcoin, to this other mindset of, oh shit, well, if you're able to then use your Bitcoin to generate more revenue to then buy more Bitcoin, well, now you're becoming a leveraged ETF on Bitcoin. And people have really come around to this whole market concept of strategy companies. I think now there's over 100 Bitcoin treasury strategy companies on the open market. So I think LeoStrategy is executing this even better than all of them. And I'm obviously heavily biased by wanting them to succeed because it has to do with Leo, but I really like everything that's happening here. So whether or not you touch anything LeoStrategy related, I think at least read the posts and try to understand it if you're just curious, from a learner's perspective. That's the mindset I like to take into these things, is like, how can this improve every other aspect of my life in terms of just learning? And I've spent a lot of time just reading and digesting the things that they put out. And then I've also been spending a lot of time lately, and I've been sharing this on Threads, watching videos about MetaPlanet, watching interviews with their CEO, watching interviews of Michael Saylor, and really trying to digest, can this type of financial engineering actually be sustainable? And if it is sustainable, what is the end game of it? And I think LeoStrategy is showing what that end game looks like. It looks like a financial services organization that releases all sorts of different derivatives and enhance your life. And they do all of those with the backing of their balance sheet. It's not like a Fugazi Ponzi scheme. It's if they can build a strong balance sheet and then release products that harvest that balance sheet, well, that's literally what every bank in the world does, right? Like literally every bank, every, institution, what do? They build a balance sheet, and then they sell you products, services, and derivatives around that balance sheet. And then they generate profits, and they use those profits to then build up their treasury, aka balance sheet, and then launch more and scale bigger. So this is nothing new. I mean, this is finance 1.0, but it's just applied to blockchain. And that's what I find to be really fascinating about all of this. So thanks for watching. This has been 41 minutes of me just blabbering. So I don't know if you stayed till the end. If you stayed to the end, comment below and say that you stayed till the end, and let me know if the video sucked or if you liked it. I'm curious to hear your thoughts. Thanks for watching, and I will see you maybe at the Lions Den on Friday. Today's Wednesday. So hopefully I'll see you at the Lions Den on Friday. Peace.